Now, the income portion of this form is pretty straightforward. Gross receipts, returns and allowances, cost of goods sold, other income. Now, cost of goods sold is actually calculated in part 3 of the form, which we're going to get to. Schedule C is just like most IRS forms. There's all kinds of good things happening on page 2, and they pull forward onto page 1, and Schedule C is no different. Now, you would think that income would be a simple matter. I mean, income is income, right? But not in the world of micro businesses. There are a couple things you want to watch for. First, look for a category in the books, and this is assuming that there are books, that says other income. Half the time, this other income is a loan of some sort. Or I've actually had it where, other income is money I transferred from my bank account to the business bank account, because your client doesn't necessarily understand that in your world, that's taxable income. They don't understand that they're going to pay tax on this. So you kind of want to ask the questions. Is this all money that came in from somebody else, from your customers? And then they'll do this pause and, they're trying to figure out, is that really true? Now, remember that often the reason this comes up is if they're using QuickBooks and they're trying to get the checkbook to balance. So some money came in from somewhere else, like I say, a loan or from their personal account. They have to account for it somehow in QuickBooks. So what do they call it? Other income. That's the category of choice. Is it really income? Of course not. So you have to take it out. Now, the other question that you have to ask your little micro business clients here is, did you do any trades with anybody, any barters? And very often, yes, they did. I traded 2 of my birdhouses to a guy who mowed my lawn. Is this income? 2 birdhouses worth of income? Yes, it is. Of course it is. Is it recorded in QuickBooks? Of course it isn't. So you have to add this income in. The sort of things that should go into other income is interest from checking and savings account, bad debts written off last year, but were in fact collected this year, prizes, rewards, things like that. Now, let me just take a little pause here and say, barter is not a bad thing. Okay, it's only a bad thing when it's not reported. I have a massage therapy client who we trade. I do her tax return and I get a couple of massages. I include the value of that trade in my income. I make sure it's included in her income. Everybody's happy. And the sweet thing is she and I both think we're getting the better end of the deal. So, what is not to love about that? Okay, let's move on. Okay, now we're going to talk about part 2 of the Schedule C, which is expenses. Now, what you're going to see in this form is IRS's boilerplate. It's a boilerplate for expenses. Every small business in the world is expected to fit in to these expenses. Most of these are pretty self-explanatory. I like to think of these categories as very broad. There is an other expense portion on the second page. I try to put as little there as possible. The IRS really prefers to see the different kinds of expenses in its predefined boxes. And even if you have to kind of force a little bit of a square peg into a round hole, it can be the best thing to do. So advertising. Advertising is business cards, the website, flyers. And for some reason, people always want to list the website separately. But what is it? It's just advertising. So put it in there. Car and truck expenses, contract labor, and depreciation are 3 kind of special categories that I'm going to cover in detail in the second hour of this course. So stay tuned for that, all the fun that awaits you in part 2. Employee benefit programs, don't see a lot of this in micro businesses. Now, insurance other than health. Of course, health insurance for the self-employed goes on the front page of the 1040, not reducing FICA, unless there is some sort of special insurance plan for the business, which I'm going to talk about also in part 2. So the sort of insurance that you're going to see here on line 15 is, liability insurance, E&O, things like that. Now, interest. Interest is not usually for a micro business. Is there a mortgage on a building? That's not typical for a micro business. I'm not saying it's not possible, but it's not typical. More typical is interest for a credit card or a bank loan. Now, this is a really good reason, just in case they needed a reason, to have a separate credit card for the business. If the credit card is business and personal, it could be quite a little trick to separate out the business portion of the interest. I mean, frankly, I won't let them take it unless they have a separate credit card for the business. So that provides some impetus for that. Legal and professional services includes your fees and mine, of course. Now, and the full amount that we charge them isn't supposed to be here because realistically, only a portion of our fee was for the business, unless that's all they have is the small business, and the whole reason for the tax return was that small business. Office expense is just the office supplies, paper clips, postage, envelopes, like that. Pension and profit sharing plans. It's important to note that this is not where we record the business owner's contribution to his own retirement plan. That goes on page 1 of the 1040. This line is for the business owner's contribution to an employee's pension or profit sharing plan, and you know that the business owner can't be an employee. Now, I recently came across a tax return where the tax preparer evidently was not sure which line to use, so he recorded the pension contribution for the business owner in both places. Not good. Don't be that guy. Now, rent or lease. This is pretty straightforward. This is renting, perhaps it's renting an office building, perhaps you're renting some equipment. This is where it goes. Repairs and maintenance. This is for business property. Yes, we can include repairs to computers here. Supplies not recorded in Part 3. So Part 3, and like I said, we're going to talk about that very shortly, that's where we record our cost of goods sold, which includes the purchase of items for resale or for manufacturing the product that our micro business is selling. This line is not for inventory. It's not for anything that properly belongs in cost of goods sold. Instead, what we're going to see on line 22 here is books, professional instruments, equipment that will be used within a year, things like that. Travel. This is business travel, which can of course also include travel to a convention or training of some sort. Meals and entertainment. Okay, let's discuss this. Starting in 2018, calendar year 2018, so that'd be tax year 2018, meals and entertainment expenses for clients are no longer deductible. So we can still deduct meals for office meetings, meals while traveling, but that whole let's pay for the client's lunch thing is gone beginning in 2018. I'd like to think it was because it was just so abused. Utilities. Now this could be utilities paid for an office space that's being rented. I usually include the business portion of the cell phone bills in utilities. Like I say, I do try to use these categories as much as I can. Now note that this is the business portion. The IRS is never going to believe that 100% of your client's cell phone bill is a business expense unless the client can pull out of his pocket right there in your office 2 phones. This is my personal phone. This is my business phone. And let me say, I work with a lot of small business clients and I've seen that one time. One time. Okay. So most micro business owners will have their business pay for the cell phone for the entire family. This has to be unpacked. So, no, Bob, you don't get to deduct the cell phone bill for you, your wife, your 3 kids. You can deduct some portion of yours and that's it. And the portion has to make sense. The guy made $5,000 last year. He wants to deduct 90% of his cell phone bill. Probably not. It probably doesn't make sense. Wages, line 26. This is wages paid to others. Remember, you really do have to tell your micro business owner that he does not give himself payroll. This is obvious to you and me. It's not obvious to your client. I've actually stopped being surprised at how many new business clients show me that they have paid themselves. They even have paid payroll taxes and everything. And oh my goodness, imagine untangling all that. Okay, so that is part 2. Okay, now line 32, just drop below expenses. Line 32 says if you have a loss, check the box that describes your investment in the activity. So this is an issue only if you have a loss. Now, if you check line 32A, the software will let you take your loss to the 1040. If you check line 32B, you might actually have a limit as to the amount of losses that you can take. So the IRS has this idea that if you have borrowed money and that money is a non-recourse loan, you're not at risk for that money. There's no reason you'll ever have to pay it back. You don't get to take the loss. This is where you might have to ask your client, where did this money come from? There was a loss. Was it all your money that was lost? Or was it the bank's money and you don't have to pay it back? It's a non-recourse loan for whatever reason. Or perhaps it was borrowed from an investor and your client really is not at risk for those funds. So that would limit your loss.